Okay, what up? Welcome back. Let me make sure it's not okay. Yeah, we don't have it. Okay, it looks like Instagram fixed their audio, so there's no drag on the noise. Good. Hopefully it doesn't start echoing. All right, so what are we looking at today? Short term, right? Inflation scenario for tomorrow. We do have inflation, and then we have basically the end of QT is what the market's looking forward to, the end of QT, and we're gonna go over that. So short term, what do we see in the next couple of weeks? What does price action look like? And then long term, what is the market looking forward to? Let's get into it. Oh, that was the wrong button. Let's go. All right, so here we got S&P making a big run at the end of the day. We have inflation, CPI tomorrow, headline, and core CPI tomorrow. Friday, we got PPI. We got Fed Kashkari also speaking. Welcome back. Stay tuned. We're going to go over everything. What up? Jervine CBO says Bitcoin ETF trading to be approved tomorrow. Well, yeah, we'll go over Bitcoin last because, again, we've been anticipating this. We'll see how the price moves. Welcome to the channel. All right. So first, here's the all-time high for S&P. S&P's headed for there. We might see this tomorrow touch, get above. It's looking a lot like we stay bullish into earnings season, and then halfway through, my guess is we sell off depending on how the market reacts, because we got to look at how the inflation data comes out tomorrow. There's a lot of expectations. So let's go ahead and jump to what the market is anticipating, or Wall Street. Okay, what is Wall Street anticipating here? Wall Street is, and this is a slide deck. It's on my Twitter if you want to look at it, if you're missing it here. I'm going to try to navigate all these. I am the editor, the producer. So let's try to get this all through. All right. So basically, Wall Street is looking at Bank of America, Barclays, Citigroup, Deutsche Bank. Headline CPI, month on month is on the left-hand side. Okay, your month on month headline, month on month core, and then your year over year. Those are the two measurements, year over year headline, and then year over year core. Which one is the most important? We got to take all of it in consideration. So first off, what is Wall Street basically expecting? CPI to bump up to 3.2, okay? 3.2 from 3.1. So is that super bearish? Maybe. It depends on the core. Either way, they're expecting a bump higher. That's the expectation. If we come in below that, very bullish for markets. If we come in line, I think it's just going to be neutral. If we come in for some reason at 2.9, very, very bullish, right? But the core CPI is actually due to come in at 3.9. So that's a drop from 4%. And remember, the question here is, are we sticky, or is it just like the interpretation is going to be different? Is it sticky inflation? Are we seeing just sticky inflation, or are we actually getting just a slowing of the deceleration? And I think that's what we're looking at. The other part here, okay, just looking at this chart, the other part here is Saudi Arabia. Right? A lot of these inflation numbers are coming down. We know Christmas was the most spending, right? That's where you're going to get the most spending. The biggest spending is going to be November, December. So we're expecting this to slow. It might be kind of sticky because obviously these numbers coming out are a reflection of December. But going into January, the next month, the market might look through this 3.2% inflation number. It might just look through it and say, hey, look, we know it's coming down. We know that January and February will come down even lower. Where's growth? Where are earnings going to be at that point? Also, yes, oil is still above 70, but if you do look at, if we do anticipate Saudi to flush the market, a lot of people are anticipating that Saudi to flush the market. That's going to be interesting also, because then that means expectations of inflation drop dramatically. That's what I'm expecting. Just keep an eye on oil. We'll look at the oil chart a little later. Want to definitely get through this, and I'll answer your questions on the way. Neutral or lower CPI, market rides higher. This is Ruber Naram. I'll just call you Rubber Man, right? Higher, a lot of room down. Stay tuned. A lot of room down. Yeah, a lot of people are bearish. Like the reason why we do the macro, the fundamentals, because most of the macro analysts have been bearish all year 2023, and they were wrong. So, and I know people are like, oh, well, we're gonna roll over at some point. Sure, you're gonna have corrections. So we're gonna talk. I'm just giving you context. Make your own decisions. Look at your own technicals. I'm gonna give you some context here. Now, Fed Bostic. Okay, just I think yesterday, 2 days ago, Fed Bostic. He's not a voting member, but he did say the Fed uses their language to signal to the market And what did he see? He said that we are seeing a positive point, basically shorter term measures of inflation, such as 3-month or 6-month annualized, are more important. What does that mean? That the month on month is going to be important. The year over year is whatever. So it might not even matter. They're going to measure, 6-month and 3-month annualized. That doesn't show up in the actual data. You have to look it up on Twitter. Somebody's going to show it. Nick Timros on Twitter usually does show it, but that calculation has been for a PCE has been at 1.8%. So he's saying there's a lot of improvement there. Which one? What does the market anticipate? What is the market going to digest? Well, probably the 3 and 6 month annualized, which isn't going to show up in the data right away. But we will find those measures tomorrow when we do the live tomorrow for inflation, right? Anyways, Fed Bostic is signaling that. We got Kashkari, Fed Governor Kashkari, who signaled before, hey, rates are tightening for the market. That was the case. We went higher, right? This was before the big Santa Claus rally. The market said, hey, the Fed said, hey, look, not the Fed member said, Kashkari said, hey, I think I still have that video, but he said, hey, look, annualized, 6-month annualized is falling. We're getting that fall. And the bond market is tightening for us. And boom, the market exploded. The bond market fell, right? We're talking about rates here. So look up for the Saudi flush. Kashkari speaks on Friday. We'll see how the market actually responds. The more important thing to look at, as always, is going to be our macro forces, the 10-year yields or inverse TLT and the dollar. So keep this in mind, as always, right? Macro, these are your macro forces. This is S&P. Look at S&P trying to make another high here. Okay. I see you. Maybe somebody leaked some information, right? Maybe they leaked it. It's going to be really good. Who knows? Or it's just zero TD options, zero dated options. People are now starting to cover those shorts. I think the shorts just keep getting burned here going forward. But, okay, let me not get off track here. DXY, this is what you want to see. Let's go to that daily chart. And then here we go, pressing up against all-time highs. Your all-time high is above 480, basically, for S&P 500. And the macro force we want to keep track of, this is the reaction tomorrow, right? This comes out before the market open about 1 hour, 60 minutes before the market actually opens. And what we're looking for is, does the dollar tighten? That's your plain out signal. Does the dollar tighten? Does it get to that next level? If it does, S&P is going to pull back. If it gets stuck at this point and starts to roll over, well, that was it. That was pretty much it. And I think we run up new highs into earnings season, right? Into earnings season. Typically we reverse during mid-season in earnings. We've done that for 3 quarters and 3 times in the last all of 2023. Also rates, and rates look like they're trying to go higher again, right? But we don't know. It's all about the CPI tomorrow, whether it's month on month, year over year, 3-month annualized, 6-month annualized. There's a lot of different reports. So just watch the TLT or the inverse, the bond yield. Does the bond yields go higher? Do they continue higher? I don't know. We just don't know. Here's your inflation print. I have this at the bottom for you. The white means we actually came down. So if we get another white, I doubt this can go much higher. It depends on where the surprise is. Do we get a surprise to the upside, to the downside? I don't know. But right now the market is anticipating better CPI. We'll see in the morning how that actually plays out. Okay. So in the short term, again, we may see, and the cues are a little wild, but we may see this big break. And there's a lot of shorts here. We know there's shorts all over the place. We might see this big break to the upside, and there's no resistance up here. If these shorts get pressed, right, breakout traders are going to come in tomorrow, and we move much higher. If not, we just move in this zone. We're just moving sideways in this zone. We'll see how that actually plays out. Believe it when I see it. What is it? Let's be leaving. Like in my brokerage. Believe it when I see it. Oh, okay, cool. Nice comment, I guess. Yeah, so let's get back to the report, right? So the market is always forward looking. Let's pull this up. All right, I'm going to pull this up for YouTube. The market is forward looking. So here's what we're anticipating for the market, right? So we just went over this. Fed Bostic is saying, hey, look at the 3 and 6 month, not just month on month or year over year, because they don't want the market to front run them. They want to keep things sort of mysterious, right? Until it comes out. So everybody's looking at that. When inflation now here's another chart. Just keep this in mind. This is why I think we still run higher. We're not at, we're not going much higher. We're sticking around 3, cool, whatever, not a big deal. All right. Now what this tells us is this yellow line at the bottom is 3.5%, right? Annualized CPI, headline CPI. What we saw in the past is from 1992. This was after the S&L crisis, the big recession. There was a lot of technology that started coming on board. S&P went up 300%, secular bull market. And CPI was below, the key here, CPI stuck below 3.5% for that entire decade, pretty much. And the market just went much higher, right? So even below 3.5, right, the market could just still go higher because earnings, we have earnings coming up. We have QE, and we're going to talk about QE coming back. QT is done. Looking forward, the real question is, how do earnings hold up? All right. And then we go to 2011 to 2021. CPI was below 3.5% again for this whole decade, and we saw 275% S&P 500. Qs were up much more. NASDAQ was up much more. This was the decade of Bitcoin, the rising crypto assets up much more. And now we have the ETF. So anything below 3.5, historically is going to be good for the market, period. So that's pretty bullish there. What do we got here? I can't say your name. I'm going to try to get to your guys' questions on the way. All right. No, that's not what I wanted. All right, let's get to the second part. Pull this out. Here we go. The end of QT. All right, but let me get to your questions first. See, do we have anything here? Nope. What's up, Ronnie? All right. Thanks for the input. Hey, we're not done yet. We're not done yet. We're looking forward. We just talked about CPI. Just want to get through some of these comments. I hope this is a good comment. Sorry for bothering you. I want to offer promotion. We got promotioners now. My comments regarding the Bitcoin ETF approval comment earlier. Oh, you'll know. Well, I see what you're saying. You'll see it when you believe it. Sure. I mean, yeah, we'll all see it when we believe it. We don't know what's going to happen. So we're just staying tuned here. Quick question. 10-year yield, TLT, or inverse correct? Buying pressure on TLT means inverse for equities. No, buying pressure on TLT means rates come down. That increases valuations or basically multiple expansion for S&P. So if TLT goes up, I think, TLT going up also, stocks go up, equities go up with TLT. That's been the change here, Jervine, because literally yields come down, right? So the market does not want to see higher yields at this point. Now, later in the future, as growth returns, the market might be okay with higher yields. Just like the roaring 20s, rates actually went up incrementally, and the market had the best bull market in history. So that's also a possibility, but we'll get there when we get there. I don't think we're there yet. But right now, TLT should be going up with stocks at the same time. And if that's the case, the dollar comes down, right? Because if TLT goes up, rates come down, the dollar's worth less. And the dollars also, or dollar bulls, are looking at, dang, the Fed's about to start cutting rates and talking about their balance sheet expansion again. Well, that's bearish for the dollar. That's printing more money. So I think bonds go up with equities. And then we'll see what happens in March if the Fed does cut. And if they do, yes, bonds will keep going up. But if growth returns and they don't cut, equities still move higher. And bonds pretty much, I think bonds slow down. Got mixed up. Thanks. No, you're good. All right. So back to it. Now, here's the secular part. Here's where I'm super bullish, or where the market should be. This is an inflation killer. Growth. Okay. Everybody thinks, oh, if growth continues, inflation goes up. So much recency bias. Look, from 2009, right, there was a lot of printing, and, inflation did not go up. Growth and inflation are tied together, but it is not the absolute level of growth. It is, you just want productivity growth, right? You want growth without inflation. Inflation is always going to exist, but if inflation remains, like we saw earlier, below 3.5%, you're good. 3.5%, the market is fine. And we see S&P, wow, headed for all-time highs at the moment. So this is an inflation killer. We go back to the, 2002, after the dot-com bubble, the roaring bull market, we had productivity at very high levels. This is today. This is what we're seeing today. A big uptick in productivity. This is lower input prices and growth at the same time. It is the best growth you can get. It's coming from, technology mostly. And the point here is that it absorbs inflation. So the last time we saw these levels move higher, right, of productivity, we had a roaring bull market. This was early 2000 all the way to 08 before we had another crash, everybody's calling for a recession. It's going to come. Well, duh, recession will come at some point, but it doesn't mean it needs to come tomorrow. People will scream recession for 5 years and then say, I told you so. right? So next time we had the next bull market after that last crash, we had productivity jump. Now this was due to stimulus, okay? But we had another bull market. We had more stimulus, productivity jumped, another bull market. Now we're getting productivity pick up while rates are already high. So now they can still, like, this is a good position for rates. I mean, for the market, because rates are not at zero. They're pretty high. People are getting a lot of income from cash, and productivity is picking up. No recession here. Productivity is growing, right? So this absorbs inflation and usually results in a bull market. Let me try to slow down. I'm going a little quick there. All right. So, and now, we're basically talking about the end of QT here. Why are we getting the end of QT? Because if growth picks up and inflation doesn't, the Fed can now take care of all the, the commercial real estate stuff, or all the high interest rate sensitive, companies, businesses, whatever they are. And really, this comes down to the U.S. Treasury, right? The rates are too high. The deficit is really inflated, but you want the interest payments lower. So this is from Global Macro Investor, Raoul Paul. Shout out to Raoul Paul, GMI. He says all nations, and look at, we're getting a global, right? We're getting a global election cycle. What do? They print more. They have to print, right? They have to create more money supply to pay off the interest payments. That's what he's saying here. All nations are in fact funding debt growth in excess of GDP via debasement. If you want to see what that looks like, just look up the impulse, right? It is a Bloomberg credit impulse. It is basically credit over GDP. Is credit moving versus GDP? It is moving GDP versus GDP in the US, in China, in Japan. They're printing money, right, into capital markets. That's going to flood into the economy to get GDP back up at some point. Why is that okay? Because inflation is falling. It's negative in other areas, very negative. It's falling. So you're starting to get that. Anyways, this is the trend of global liquidity. Right? This is the trend of global liquidity. At the bottom level is where they start printing again. This is typically at the bottom, right? I think you get one back here in 08. Yep, 08, it was at the bottom. And then we see it again in 2016. I didn't even get there, but we saw it definitely in 2020 when liquidity slowed down a lot. You got that big push. So liquidity is set to come back. What is liquidity? Global money supply. Fed printing, central bank printing, coming back again. We're at the bottom of that log trend. Total liquidity picks up. That reaccelerates economic growth, period. So we're set to see that. It is starting to pick up there. And this is because central banks are the ones who monetize the US Treasury's debt. Their Fed balance sheet is coming back in a real way. And, Fed Powell actually talked about this in his last meeting. What did he say? He said, hey, look, we are now discussing turning the balance sheet back on. Or in other words, we're going to stop draining the balance sheet. If they stop draining the balance sheet, that stops removing money. This is this is hard to say. Let me try to simplify it. That means they're going to no longer remove money from the system. They've been removing about 95 billion a month, taking cash out of the system, 95 billion a month. They're going to start shaving that down. Who knows at what pace? We don't know. That market's going to be looking forward to that. So if we do get a big correction over the next couple months because earnings are weak, because the economy is slowing down, well, more liquidity is coming back. All right, monetizing of interest payments, liquidity boom. Now, if you didn't already know, commercial real estate loans are still climbing at a slower pace, but they're still climbing. These are commercial real estate loans. Residential real estate loans are still climbing. And now that we're going to see interest rate cuts and the bond market is slowing down, I'm sorry, not slowing down, but interest rates are coming down, more loans are going to be printing. We just had this talk with a mortgage expert, and he's showing us that a lot of refis are happening. A lot of people are refining. They want to move. And now that rates are coming down, if they continue to come down in a slowing economy, you're going to see more loans. Yes, auto loans have been falling for a while, and there's probably a lot of delinquencies. But what is the bigger debt? What is the bigger problem? The bigger problem here is residential, right? Most of a lot of collateral in the system is not auto loans. It is mortgage loans, and they are not falling. They're going higher, which tells you there's no real risk there. Auto loans can be fixed pretty quickly. That's not going to be a big dent in the market because the market is not driven by real estate the way China is. It's driven by technology. It's driven by Apple, Amazon, Google, Facebook, and consumer spending. So you need to keep an eye on consumer spending. Right now, this is just money supply. This is the momentum of money supply. That's been picking up for a while. This was actually October 2022, the bottom of the market. This tells you liquidity does impact the market significantly. This is when liquidity bottomed. This is when the market bottomed, and it's still climbing higher. This is a little lagged, but it's still moving higher. This is G4. central. This is a PBOC, so the Chinese central bank, the Fed, the ECB, European Central Bank, and the Bank of Japan. And that liquidity is set to go higher. This is the trend. Liquidity or money supply is due to pick up because now inflation is making enough progress where they can start unleashing more liquidity all over the world. Europe is the last to move, and there's a lot of signals that Europe is going to start cutting rates and start QE this year. Tuga FX, man, you guys got some hard names. TLT is basically an ETF for long bonds, and long bonds work inverse to interest rates, right? So if bonds go up, interest rates come down. If bonds go down, interest rates go up. They work inversely. TLT should be going higher because we're headed into a slowdown, and that's when people want fixed income. It doesn't mean it continues. It's just like over the next 3 months, right? So the end of QT is basically around the corner, okay? But we will have a rocky start. So this is the bear case, right? My thing is, I think we do pick up, okay? It looks like the market wants to blow off top here. I mean, I'm looking at S&P is going up to 477. People are covering. We're headed for all-time highs. More bullish sentiment. But we have a couple problems here. Number one, earnings are not that great this quarter, but the market can see past that. The other issue is shadow liquidity is running out. This has been the force. Everybody thinks we've been in QT, right? Quantitative tightening. And quantitative tightening is when money leaves the system. This represents money leaving the system. And now that money is now coming back into the system. But it's it's due to run out at the end of March. So March, April, May, who knows how quick it comes out. Once it's done, there's no more support from shadow liquidity. There's no more support. All right, this is basically the Fed pushing money. Right, it's really technical, but it's financial engineering. They've been supporting the market the entire time, right? They've been supporting the market, and it peaked in January when we had the big bull market in 2023. This was this inverse looks exactly like S&P, just moving higher. It looks like the Qs actually, right? Technology stocks. So now we have that liquidity coming back in, but it runs out later. It goes to zero. So what happens? That's where I think there's a lot of uncertainty that we're going to see come February, the end of February, which is also earnings, February, and then March. Okay, what is the Fed going to do? That's why I think also they're talking about rate cuts, because they know this liquidity is going to run out. There's no more support for the banks. There's no more support for the bond market. So rates might climb. And that's going to be the scare here is if this runs out, and this money has been leaving, this is basically money leaving the Fed, right? And where's it going? It's buying T-bills. It's buying bonds. It goes to buy where it has, there's more incentive to buy the treasuries that the U.S. has been printing or creating more money, which is debt. So this is buying U.S. debt. Basically, all this cash is buying U.S. debt. I know I keep repeating myself, but I want to get it, clear for if you're still listening. And if you got confused, sorry. And this money will run out. So if it does run out, guess what? The Fed has to find somebody to buy those bonds, to start buying treasuries. So they're talking about QE again, or turning back on the Fed balance sheet, or no longer draining it. So that's very bullish for markets. But until we get clarity, that's going to be a lot of volatility. So I think we're going to have a lot of volatility until the end of March. I don't know for sure, but I think we're going to have a rocky February, March. We might go to all-time highs and then pull back and then find out, hey, what is the Fed going to do? Are they going to cut rates? Are they not? Where's the bond market headed? Where are rates headed? What's going on here? So QT is set to run out going forward. But that also means, right, the reason why they do cut rates is because look at core PC. This is how the Fed measures inflation. 6 month, and this is what I meant by 6 month. Remember, we just talked about Bostic from Atlanta. He said, look at the 6 and 3 month trend of inflation. Here's the 6 month trend of inflation when it comes to the Fed's PCE deflator, or the way they measure inflation. And it's at 1.8, right? It's already below target. Now, that's just one measurement, but this does show you there is a lot of progress. Historically, it's back to where it was, normalized levels, and that gives the Fed, that opens the door for QE. That opens the door for rate cuts, even if it's small rate cuts, or, no longer draining the Fed's balance sheet. That opens up the door because PCE or inflation progress is happening at that. Now, here's the Fed rate cuts. This is March. This is basically, we're looking at the March we're looking at this line right here is basically March, when the Fed has their meeting. Do they cut? I don't know. We'll find out. And if it does cut, we're going to start seeing interest rates come back down. The market is sniffing that out. And we also have to look, I forgot to mention this, we need to see today, and we'll do this after this. We need to see the how much Fed are the percentage of rate cuts, the probability of rate cuts that the Fed is that the market is anticipating today versus tomorrow. Why do I say that? Because as inflation comes out, if we see the probability of rate cuts go up, that's very bullish. If it comes down, then not as bullish. HS in the market, head and shoulders in the market. Is that what you said? Head and shoulders? Do you mean head and shoulders, Bukowski? So yeah, Fed funds coming down. Now this is what I meant by the Fed balance sheet. Keep an eye on this. This has been draining for a long time. This was the banking crisis. They pump liquidity. Now it's coming down, but now it's like, okay, at the March meeting, are we going to see a flattening? Are they going to stop draining it? Are they going to slow down? Instead of 95 billion, do they go to 50 billion? Do they slowly? And this is I know people are going to say, well, they're still pulling money out of the system, but they're doing it at a slower pace. And that is the turn. That is the macro turn, because eventually they're going to start QE again. It has to come back to monetize the interest payments for the U.S. Treasury, or else we can't afford to keep printing more debt. So that's it. The end of balance sheet runoff is basically, this is the balance sheet runoff, right? Pulling money out of the system. The credit card is falling. Once that credit card goes back up, you're putting more credit into the system. Well, very bullish for markets. But the question is, where are we at that point? I don't know where we actually will be at that point. So we'll keep our eyes open. And that's what we got for that. Fed Kashkari tomorrow. No, Friday. He speaks on Friday. We got PPI also on Friday. And I know tomorrow we have inflation, but I just wanted to show you that, hey, sometimes the market doesn't move right away, and then it moves the next day. But Friday, we got earnings season also, starting with the banks, and earnings are already lower. I think I have it here. Earnings are pretty low. I don't want to say earnings are lower, but the banks, the financials are showing a deceleration. But the market's forward looking, and it already knows this, and it wants to see QE. It wants to know the Fed stance on actual QE. And let's see, where were those bank earnings? Here we go. United Healthcare, JP. So we got the biggest bank in the world: JP Morgan, Bank of America, Wells Fargo, BlackRock, Citigroup, Bank of New York Mellon, and 1, 2, 3, 4, 5. Well, I guess 4 banks. Let's just say 4 banks. 4 out of 5 banks on Friday are set to decelerate on their earnings per share. And I don't know how the market's going to react to that quarter over quarter. I don't know. If they do beat, we'll see what happens. You have a lot of earnings. I don't think the market really makes a decision till halfway through earnings. So we need to get through the end of January, beginning February. That's when Apple reports, and then we'll see. The market usually makes a decision at that point. But we have another headwind, which is, where's liquidity at? I don't know, right? I don't know where liquidity. When I say liquidity, I mean, where is that bank term funding program, or where is the shadow liquidity? Is it fully drained? Is there more room to go? If there is more room to go, then the market can still go higher. So just a lot of uncertainty on what the Fed policy is over the next couple months. And we need to check up on the CME data. Let's check the CME data. What is the market pricing in for rate cuts? And then what is that versus tomorrow? So we make sure you keep this on your radar. Come on, load up. So we're looking at this is for January. Okay, so January 31st. Is this the meeting? January 31st? Let's look at March. Okay, so 65% chance of a rate cut in March. 64.5. What we want to see is, after inflation comes out tomorrow, does this go higher or lower? If it goes higher, then we know the market's trying to digest a closer chance of rate cuts. And this is not rate cuts because of impending recession. This is rate cuts based off of slowing inflation. So it really just comes down to inflation numbers. We just don't know how they're going to interpret that. If that 3 and 6 month continue to fall, that's very bullish for the market, because that's what the Fed's looking at to actually cut rates. Who knows if they actually do? There's a scenario where they don't cut rates, but yields come down, and that's basically a rate cut if you get yields come back down. The problem is yields are still pretty yields already made a very sharp down move, and I think yields might be bumping up. So I don't know. This is hard to digest. It's really hard to digest. I'm just trying to give you some context to make your own decisions, right? So, here's the 10-year Treasury. It was at 5%. It dropped all the way to 3.7. This is basically 4 or 5. This is like 5 rate cuts right here. 5 rate cuts, 25 basis point rate cuts that we've seen. which fueled the Santa Claus rally. So if they go back up, now you're putting rates back on the table, not the Fed rates, but the market rates, right? So they did bump up a little bit. And really, inflation tomorrow, where does this go? Where does this go after the numbers come out? If it goes up, well, we might have a pullback. If it goes down, the market goes higher. It's as simple as that. That's the macro forces that you want to keep your eye on. Okay. What else we got here? Current market structure looks similar to prior to December 12th CPI, which came out at forecasts. Okay. Market structure. You're talking about and Bukowski, I didn't know what you were talking about. Market structure as in the head and shoulders. I don't know what you're talking about. Then we rallied. Okay, then we rallied. Yeah, so I did say, hey, I thought the S&P would come down, and that did not happen, right? This should be a little thicker, I guess, because we're already there. So this is the inflation report. I thought we would sell off into the report. Instead, we bounced prior, and I said that was a possibility. So we'll see if inflation comes out good. I mean, we're going to take off. S&P is going to take off. Unfortunately, Tesla still looks like trash, right? I don't think you see anything in Tesla till the end of earnings. We need to hear the earnings report. How does that play out? And we'll see how that plays. We'll see how that goes. Bitcoin, though, I think, man, crypto is going to go wild after this ETF comes out. There's nowhere but up from there. There's going to be a lot of reports about inflows, especially if the market lags a little bit. Then we should see that really start to kick off. All right, so what did you say here? You know, Mr. Tom Lee is also bearish for the first half of the year. Yeah, he's bearish. I mean, I wouldn't even say it depends on what you mean. He is more bearish than usual. So yeah, versus where he is more bearish. He's more bullish on small caps because he thinks there's a catch-up trade, and we will look at tomorrow, Bukowski will go over positioning, right? Sentiment and positioning, where that's at. And I think what Tom Lee is saying right now, positioning has been, let me try to draw this on here. Positioning, here's the top of positioning. Positioning was really high, and then it started to roll over. But if we get a good inflation report, it could go right back up. We should see positioning go right back up. And then we have a quick rally because he's calling for all-time highs again. And if we get all-time highs in S&P for the first time, we might get a blow off top for a bit. And then all of a sudden, halfway through earnings, Apple reports, right? I'm using Apple just as a model, right? As something, a signal, because that's typically when the market makes this decision. Apple's the biggest bellwether for the stock market when it comes to earnings. So, and maybe it's NVIDIA going forward. I don't know, but AI is definitely a real force. So let's say we break out, we hit all-time highs, we're moving higher, and then Apple comes out, the market says, okay, these earnings suck. What is the Fed going to do? We're going to sell off until we get more clarity if the Fed really does cut. So Tom Lee is saying we get a 5% pullback, which would take us right back to where we are today, right? I don't know. Who knows how it actually plays out? But we might get that. And then the Fed says, okay, look, we're going to turn off. I mean, the Fed, the shadow liquidity is gone. We're going to cut rates. We're going to shave the Fed balance sheet. That's very bullish because inflation continues to fall. So there's a lot of variables that could change on the way. But this is what Tom Lee's saying, basically. We break out, we go to all-time highs, and then we sell off, right? I think it's going to be halfway through earnings. Who knows exactly how it plays out? Again, this didn't play out how I thought. We actually went higher this time. And I think we still have more room to go to the upside. A lot of people are there's still a lot of under-leveraged investors. Okay, there's still a lot of very under-leveraged investors, and those long-term investors are probably going to wait for earnings to see if multiple expansion comes in. If the earnings go up in some it's stock pickers market, if earnings do go up, then overall for S&P, or they beat. And look, the analysts have been lowering expectations for earnings, which sets you up for another beat. Yes, is it manipulative? Sure, but everybody's in it to make more money to the upside at the end of the day. So, I mean, it's a lot of uncertainty. This is probably the most. I have no clue what's going to happen at this point. I'm just giving context because I'm waiting for a big move to the downside, a big move to the upside in certain stocks, not necessarily the S&P. It can slowly just grind higher, right? But yes, Tom Lee is bearish. Let's back that up. So Tom Lee's pretty bearish for the first half of the year. And what he's saying basically is once we get clarity in March, where's March at? Here's March. Once we get clarity in March, let's say we go up, we come back down. We get some clarity in March, and then April comes, people start positioning back in, and everybody wants to buy this dip because profit margins are still rising, inflation is still falling. Now the Fed is cutting or they're really starting to roll into QE. You're going to see Europe start to go QE. China and Japan's already in QE. Boom. Now we have this big move. Productivity gains are picking up. Global liquidity is picking up. He's still very bullish. Maybe it doesn't play out the way he says. I don't know. He's been right for the last, 2 years? But everybody can be wrong, obviously. So you just track it and see how the market actually plays out. My favorite thing is just look at the dollar, okay? Dollar higher, market down. Dollar lower, and if we do end up breaking lower, look, dollar positioning, I'm going to come out with positioning tomorrow, so we're not going to go over that today. But if dollar positioning unravels, I think actually if you're on YouTube, you might be able to see it. You won't be able to see it on TikTok because you're not on YouTube, so jump on YouTube if you want to see it. But dollar positioning is, I think I put it on here. Let's see if I can find it. Here it is. No, that's not it. I guess I don't have it up here. Nope, I never put it on. I'll load it up right now. Yeah, I'll load it up. I think I have it saved because I wasn't going to go over it today. But dollar positioning is based. Oh, here it is. I got it. Is unraveling a bit. So another thing to look at is if inflation comes out good and earnings are better than expected, right? We get another bull rally and you see the dollar positioning start to unravel. Very bullish for the market. Why is that? Because people are taking their cash in purple, right? And they're dumping their cash. And that's what you see, a dumping of cash. Why? Because they're anticipating QE is back. The Fed balance sheet's going to turn on. That is the biggest driver of stocks and risk assets, is the Fed turning the other way. The only thing stopping the Fed from this is inflation not making progress, but that has not been the case. Inflation has been making progress and there's no sign of recession. Productivity is picking up. So everything points to dollar should continue to unwind. The dollar positioning, dollar goes lower, and we see a very strong bull market. Some people are talking about the roaring 20s, that we should see another super secular bull market. These are the bulls. Okay, I got to take this off. Where's it at? I'm getting confused. All right. So yeah, that positioning is coming off. So we'll see how positioning plays out. Okay, we'll see. It's like I said, it's really tricky. It's it's not very clear here, but there's your resistance for the dollar. This is risk on if the dollar comes down. And if it breaks this level that we did visit back, when did we visit this? July. This is where we had where the market peaked out in July. We had that big monster run. And if it does break this level, that's going to signal, and this is your inflation right here at the bottom. Look at inflation, it's falling. Okay, it fell and then it bumped higher. If we get another white bar, I think the market goes higher. I think dollar rolls over. If we get another white bar, dollar rolls over, depending on PCE, and the dollar rolls over. And if it just keeps falling, I mean, it goes back to levels from pre-pandemic levels, or I guess this isn't pre-pandemic. This was the big W pattern. This is the big breakout in the dollar. And look at that big move in the dollar. This is what crushed markets. This was the bear market. So if we get the downside of that, then you're going to get very strong markets, right? Who can profit in this environment? This environment is, we're headed for more liquidity, risk assets. I think it's crypto because, obviously the Bitcoin ETF is coming out. I really, really doubt that they don't pass the ETF. It's coming. It might even came today. I might have missed it. Maybe the ETF, they approved it today. You got that fake out yesterday. So we'll see. I say we're going to a stagnant year. Jonathan, you're always bearish, man. You're always bearish. You believe all the recessionists, huh? We're headed for a stagnant year. Anyways, yeah, that's fair enough, though. That's fair. Tell me why, Jonathan, you think we're headed for a stagnant year. Does that mean a sideways S&P? Do you mean the economy is going to be stagnant? What do you mean exactly by stagnant? And if anybody else has their comments, throw them out there. And I'll tell you why you're wrong. No, I'm just kidding. We'll talk about that. So a lot of indecision here by the markets. Obviously, Bitcoin is trying to move higher. If inflation comes in low, look at that. I got approved. It did get approved. Okay, it did get approved. And you know what? Yesterday was really weird. Okay, there we go. We got some comments there on Instagram. I appreciate it. It did get approved yesterday, and it actually sold off. It moved higher and then sold off. Watch, we'll go to the 30-minute chart. This is very funny with Bitcoin. It moved up, and then it sold off, and then once it was a fake account, it went up again, and then it sold out. So there's a lot of games being played here. I don't know what's going to happen. either way, the trend is higher for Bitcoin. You have like $400 million of inflows coming, so it's going higher. If you're already in it, you're fine. If you're looking to get in, good luck, because Bitcoin is wild. It could decline 25% and then just go up 50%, especially headed into QE, right? And crypto looks at QE. All right, so we got on Instagram, a recession will come and the market will crash. Well, it could come in 10 years, it could come in 5 years, it could come in 2 years. I think more, if anything, we see a recession possibly in 2025, 2026, because right now, you know, U.S. debts are at all-time high. Okay, I see what you're saying. Well, U.S. debts are always at all-time highs. We talk about this argument all the time. U.S. debts are always at all-time highs. The deficit only gets bigger, but yet, right? But yet, although the deficit gets bigger, if we zoom out, let's go to the monthly chart. If we zoom out, deficits are always higher, right? Deficits are always higher and the market still goes higher. What you need is a black swan event. This was the pandemic. So what did that do? That crushed growth. That was not a recession. That was a black swan event. Okay, so typically, like I said, you always have that. We need a big run to the upside. Now, this was inflation, right? This was a recession. This was not a recession. This was the pandemic. So that was basically everything broke. There was no growth. Everything had to decline. And then you turn on QE, right? So if you're hoping for a black swan, that's a possibility. I just don't think it happens. Here, you had inflation get above 3.5%. Therefore, bonds sold off tremendously. That is a lot of collateral in the system, and the S&P sold off, right? But at this point, now we're going to QE at the highs, right? So maybe we do, we're going into QE at the highs. Inflation is falling. Why would we go in recession? Okay. Other part is this. Debt as a percentage of GDP is elevated, but not for the consumer, right? So yes, debts are at all-time highs, but it comes to the interest payments. Now, why are the interest payments going to fall or get paid off? Because the Fed's balance sheet. So here's what people are not factoring in, which is, yes, debt is at all-time highs, but here's what pays off the debt. Liquidity. Fed liquidity. Okay, you've been missing it all year. It ran up, it came down, it bottomed out, and the market went higher because the Fed is behind the shadows printing more money. They've been printing. This was the October lows. So debt's at all-time highs. Sure, it's always at all-time highs. It really depends on the interest payments. So that's the question going into March. If the Fed cuts rates, those interest payments fall, right? So if you're going to get a recession, it better come in February or March, because the Fed's going to cut rates. If we even get close to it. The labor market, Mr. Tug FX, the labor market is strong. So you need that to fall apart. Jobless claims, they're going nowhere, right? There is no jobless claims, pickup in jobless claims. Where's the recession? Not there. Also, you get multifamily, you get a big boom in building. Construction spending is still going up. You have the CHIPS Act, you have the Inflation Reduction Act, you have the infrastructure bill. That's $2 trillion of stimulus, creating more jobs, creating more growth. Where is the recession, right? But yeah, recession will come at some point. That is always the case. The question is, does it come this year? Or does it come in 2 years, right? Does it come in a couple of years? So that's my question to you. Tug FX is, where do you see the recession actually hitting? Where do you see the recession actually hitting? At what point? What is your time frame, I guess? What is your time frame? More fair question. Back to YouTube. Okay, here we go. I got you, Jervine here. Quick question. Oh, no, we went over that one, huh? Went over that. Oh no, went over that. Man, I'm behind. It got approved. Veronica Martinez. Nice. Okay, let's look at let's see what Bitcoin's doing if it did get approved. Let's go to this chart and we'll go. Ooh, big sell off. Good. I like that. I want to see a sell off, because if we get a sell off first in Bitcoin, buyers will come in and pick that up. If you get a big move to the upside, then a lot of people are going to chase, and they're going to get priced out of the market. They're going to get chased and crushed. It's almost better that Bitcoin comes back to the trend, and then somebody will buy it because it's lower, right? And you know for sure it's coming. Fed Williams speaking now. What is he saying? Actually, let's go check out Fed Williams. What is Fed Williams saying? Um, let's jump over to Twitter. I guarantee they're talking about it on Twitter. See Fed Williams exit this. All right, Fed Williams, what is he saying? I'm going to go to the bottom. Ooh, the ECB is talking too. A lot of news over the next couple days. I'm gonna go over Fed Williams. I'm gonna go through these questions first. All right, Fed Williams. Fed's work to bring inflation back to 2% is not done. Fed can cut rates when confident inflation moving to 2%. Fed will need restrictive policy stance for some time. Okay, fair enough. Supposed to hear BTC ETF decision at market close today. Okay, we got like 30 minutes, right? Literally, the definition of a black swan is something you didn't see coming. Right, exactly. So yeah, black swan would be something you didn't see coming, which is why it's like you can't really use that as a recession, because that's something you don't. A recession is more so you see the unemployment data tick up, you see GDP turn negative, right? It starts to happen. Forward-looking indicators, ISM turn negative, and you see that coming. A black swan is something you do not see, which would be a blow up in the banking sector. But hey, the Fed steps in as usual. I want to get into BTC miners, small cap, some QS, Palantir, and sprinkle in some Tesla. Yeah, it'll be nice if Tesla comes down a lot further. They're still swallowing the market in my view, but Tesla is the most highly traded stock. So it comes down to the technicals, positioning, and does the Fed cut rates and the earnings. So we'll see. I don't think Tesla makes a big move until after earnings. It can only be seen in retrospect, right? Okay, so here's what Fed Williams is saying. Let's try to anticipate what he's saying here, or not anticipate. Let's go ahead and interpret what he might be saying. I use this account typically to find the breaking news. All right. So let's see. And this is the ECB. Remember, the ECB is important, the European Central Bank, because they are the third biggest central bank. And if they turn QE, or if they turn dovish, or if they start turning, well, that's going to push up liquidity in general. The ECB must avoid insufficient and excessive tightening. Look at that's a dovish. They're saying we must not go into recession. We must print money. Okay, great. The strength of monetary policy transmission has been surprising. Risks to economic growth are still skewed to the downside. This is very dovish. They're basically signaling, hey, we got to start printing. The euro area economy probably stagnant in Q4 2023. So this is looking back. Inflation has evolved better than expected. That's good. And I think all these central banks want to print money, right? And people are still like, oh my God, that's so inflationary. No, it is not. Inflation is a lagging indicator. Printing money isn't inflationary. It is excess capital. Well, it depends who's printing. If it's direct checks, yes, because there's no productivity. It's just pure liquidity, pure spending with no productivity. If productivity goes up because you're pushing liquidity into the economy, and then people have jobs and they produce more, there's no inflation. It doesn't happen, right? Supply chains are strong at the moment. There's no pressures. Okay, here's Fed Williams. The Fed's work to bring in inflation back to 2% is not done. Okay, cool. He's trying to stay a little tight. It's not done, but we do know the projections are still 3 rate cuts, because if inflation falls, it becomes more restrictive, so they can cut rates 25 basis points for every 25 basis points of inflation falling. Therefore, they cut rates, and they're still at the same restrictive level. The Fed can cut rates when confident inflation. I know you already said this. I just want to go over it. The Fed will need restrictive policy stance for some time. Okay, so that's kind of tricky, because if inflation drops to 2.5, they cut rates, they're still at the same restrictive level. So that doesn't mean no rate cuts. That means they need inflation to move down to match that restrictive. I guess you could call it a restrictive range, right? A restrictive range. If inflation falls and they stay where they're at, then it becomes more restrictive. I see inflation ebbing to 2.25% in 2024. Wow, that is extremely bullish. That's extremely bullish. 2.25% and 2% in 2025. That's a good path lower. I see GDP around 1.25%, unemployment at 4%. that's a call for more stimulus right there. That's a call for more stimulus. Listen, these guys know that inflation is lagging. They're not going to wait till 2% because that would mean that the economy does fall into recession because inflation. You want inflation at 2 to 2.5%, maybe even 3%. If it falls below that, growth decelerates tremendously. So they're going to cut as inflation trends lower. Things are looking very good on the jobs front. Okay, good. Inflation situation has improved quite a bit. That's pretty bullish. The Fed are not near the point where the banking sector liquidity is scarce. Okay, what is he trying to say here? We're not yet where I think this is talking about the RRP, right? The Fed, what is it? Shadow liquidity. It hasn't ran out yet. He's basically saying shadow liquidity is not gone yet. Once it's gone, I think that's when they cut, or they just stop shaving off the Fed's balance sheet. We'll see how that plays out. I think that's it for Fed Williams. So it's nothing new. I mean, it's the same language as we saw before. Nothing new. Nothing new there. Nothing new there. Okay, let's switch back. Fibonacci Poppy or Bill Ackman does the BS again. Oh, Bill Ackman? I think you're talking about when Bill Ackman said, I'm going to go long rates. If he does ever say that, that's going to be because all of a sudden growth explodes and CPI moves up or PCE moves up. So we probably need rates above, or not rates, we probably need inflation to get, I would say, above trend. The trend is still lower. So if it breaks that downtrend, then yeah, sure, Bill Ackman probably jumps back in and shorts the treasury market. And when I say the treasury market, just look at TLT. He's shorting TLT basically. And TLT is not looking great at the moment. It looks pretty bearish, but we'll see. It's consolidating. There's still a lot of bond bids in the market. China's no longer buying U.S. treasuries, so that's bearish for treasuries. But if the Fed turns the balance sheet back on, guess what? They're going to start eating up these treasuries. Bonds go higher, rates come back down. That move probably doesn't happen until after March, though. I think all the big stuff happens going into March. We need to avoid actual deflation too. Right, there you go. Let's Be Leaving says we need to avoid actual deflation too. And that's why we're at a pivot point right now for the macro, because if you over tighten, you get deflation. That's even worse than inflation. So that's why this is where, we're going to figure out if we hit a soft landing or not. We're going to figure out if we hit a soft landing or not. That's what's basically on the cards at the moment. Let's get back to, let's go S&P. Okay, pretty big pullback from, we basically closed the gap here. Looks like we closed that gap and now we're pulling back. But this is just intraday. I think traders are going to have a good time here because we're going to have a lot of volatility with the uncertainty. January, February, March, we have earnings season. We have, is the Fed going to cut rates or not? And we have, is the bank term funding program going to be gone? Is shadow liquidity going to be there or not? Also, the dollar might move and rip higher if the inflation is bad tomorrow. Not bad, but like, too good to be true or too bad to be bullish. I was referring to Black Swan event during pandemic he promoted. Oh, okay. Yeah. Okay, I see what you're saying. Yeah, I don't know. I mean, where does it come from? Geopolitics? That's probably your best bet, that there's a black swan coming from geopolitics, as in Kim Jong-un does something crazy. Russia's out of money. They can't do much. China's economy is struggling. They're not going to try any war. They're not going to do anything. So I don't see, I mean, nobody sees a black swan, obviously, but you can't call for black swan every month, right? That's what a lot of people are calling for. Black swan every single month. Well, that's not how it works. Could next FOMC be a potential sell-off event if Fed decides to hold rates again? There seems to be a disconnect between what the market expectations for rates versus what the Fed mentioned they would do. Yeah, right now the market does not believe the Fed, and rightly so, because the Fed said what? It said higher for longer multiple times. Higher for longer, higher for longer. And they actually didn't do it. They didn't cut, but they started to pause. So typically the market, it's tough because you can't believe exactly what the Fed says. You have to watch all the Fed speakers and what are they trying to signal and how dovish or hawkish is Powell versus the last meeting. So I think the next sell-off event, in my view, is going to be earnings season. I think it's mid-earnings season. I think it's going to be somewhere around Apple earnings if Apple is decelerating and their guidance is lower, and it might be lower. They might have lower guidance. So I think it's going to be mid-season. For now, I think we move back to all-time highs. What's up, Fred? Oh, I know you. You still got that Bitcoin? Market sees more than 3 cuts in 2024. Okay. I see what you're saying. The market sees more than 3 cuts. So if the Fed doesn't deliver 3 cuts, and it's always, meeting by meeting, things could change pretty quickly. What 3 cuts really means is if inflation keeps going at the pace it does, keeps falling at the pace, then we should be seeing 3 cuts. So I think it's really about the inflation report. If it still keeps decelerating, remember 3 and 6 month annualized are at 1.8. So if we keep seeing the lagging inflation indicators decelerate, you're going to get 2. I think Fed Bostic said he sees 2 cuts, not till the second half. So you're right. There's a big disconnect. And that could lead us to, making all-time highs, technically going up because everybody positions in for that. And then you sell off mid-February or beginning of February or the end of January around Apple earnings. This is just what I'm seeing. You sell off because the Fed doesn't really signal, a rate cut in March. I don't know. It's very mixed. It's very mixed. At this point, I think you just have to watch the dollar and how it reacts, or how yields, how the bond market reacts to each important data point. So yeah, three rate cuts, great. What do earnings look like? Not too good, but if expectations are so low, it might go higher. Now, if we get something, remember, we were in trouble until AI hit the core. AI came in, right? So when AI hit, that is a signal of higher productivity and growth. And so the market just goes higher anyways. So what if in this next earnings season, we get another innovation come out? And I don't know if that's the case, the markets can move higher again. At some point, we do get a correction. What CPI print tomorrow will be bullish for markets? Tigger Media. This is hard to say. The market is expecting, so we'll go back to this chart. The market is expecting, let's go to the S&P. 3, so this white line right here is 3.2. It's expecting basically 3.2, or it's 3.1. So it's expecting somewhere around here. I think, and this is headline. So I think what'll be bullish is 2.9 or even 3 flat, maybe even 3.1, right? I don't know. I really don't know at this point. It's harder to get inflation lower. The fall of inflation is decelerating. It's not as fast as it was. It's going to decelerate from here. So if you look at core PCE, which is what the Fed's looking at, that's set to be at 3.9. That's pretty good. 3.9 is pretty good. Look at that. What a top tick. I don't want to say I think, but it looks like we just ran up to the previous high. Let's just get rid of this. We're done. We're done with that. And then, you're getting resistance there at that previous high on a technical basis. Was this yeah, this is the previous high pretty much. We just ran up into the previous high. A lot of volatility. Traders should be licking their chops at this point. So what CPI print is going to be bullish? I mean, you have core, you have month over month, you have PC. I don't know, man. There's so many measures at this point. Our forward-looking indicator, which we haven't looked at, oil, it's not, it's still at the same spot. I think the next inflation print will be very low because that's going to reflect January. There's not much spending. The consumer is slowing. So I think January looks really good, which isn't going to be reflected till February. So it's a lot of conflicting things. I don't think there's one clear path right now. There's not a clear path at all that I see. I'm just tracking it. I'm adding things up. I'm looking at positioning. I'm looking at the macro forces. What data is very important. I mean, this is a lot, man. What does the Fed say? It's confusing at the moment. Fibonacci Poppy, 6 rate cuts would only mean a recession, wouldn't it? Yeah, so the only way you get 6 rate cuts would be inflation falls considerably, which would be more which would be aligned more with the recession, which would be like unemployment spiking to 4. It would be GDP really taking a dump. And it would be and I think the market takes a slide lower first, and then if inflation does fall that quick though, the Fed turns on QE, and then we just that's it. That's the end of the bear market for sure. Well, we're not in a bear market. That's the end of the uncertainty. Once they turn on QE, it's lights out for the bears. Once they turn QE on, it is lights out. They're already talking about it. So, and then 6 rate cuts. What do you get them? 25 basis points at a time. I think that's okay. But if you get a 50 basis point cut, which usually doesn't happen until they say it, it's not like, oh, we're going to do 50 basis points. Once you get the a big rate cut, well, you're probably already in recession at that point, or something broke at that point. So I would say if they do 6 rate cuts, or if they start doing more rate cuts than the market anticipates, it's because that shadow liquidity ran out, right? Where's that chart at? Here it is. Oh man, why doesn't it show up? That pisses me off. For some reason, TradingView doesn't show up. I have to look it up. We'll just do RRP. If you want to look it up, RRP. Okay, so RRP approaching 0. Here's your 0 bound. Once it gets to 0, there's no more support. The liquidity support is gone, right? What does the Fed do when this gets to 0 is the real question. What do they do? Well, they're more likely to cut rates, and they're more likely to stop removing money from the system at this point. Maybe they do it before it reaches 0. So again, I don't know. Earnings season is huge. What do earnings look like? Maybe the Mag 7 continue to grind higher, and people get pissed off and say this market should crash because the Mag 7 are leading. Well, I mean, the Nikkei is at all-time highs, right? There's a bunch of other markets that are all at all-time highs because they're anticipating QE or money supply coming back into their system and rate cuts. Why not just trade S&P futures? I mean, I never said you shouldn't. I never said you can't trade S&P futures, or you can't. I mean, you can definitely look at S&P futures as a proxy. Let's see what they look like. This is S&P mini futures right here. Not at all-time highs yet. So these are futures if you want to look at them. Also, you have those 0 DT options that are distorting the market. 0 dated options. All right, well, I think we got through everything. Dang, that was a quick hour. Goodness sake, that was quick. Let's look at the other stuff. What are we seeing with the Dow? Okay, where's the Dow at? The Dow is literally at all-time highs, but that's only like 30 stocks. So what do you look at? IWM trying to consolidate here. This could be bullish. You see those capitulations at the gap close. So IWM is holding up so far. This might be the trade of the year for a lot of people because there's a lot of room to get back to all-time highs. I don't know. Or Bitcoin. Excuse me. Or Bitcoin going back up. Ethereum making new highs today. Ethereum. So check out Ethereum. I mean, I don't say check out Ethereum, but Ethereum is now breaking out, right? And maybe, oh, you know what? This, I didn't even think about. Thank you. Appreciate it, Tuga. I appreciate it, FX. Futures trader, right? So check this out. This is going to be interesting. I didn't even think about this till right now. When it comes to crypto, ETH to BTC is probably going higher. Yep. So you could get this. Oh, that thing broke. You could see Ethereum versus Bitcoin pick up on the ETF. You get the ETF approval, and Ethereum. I guess it's hard to see from here, but this is ETH to BTC. This might break out versus Bitcoin. We're seeing that right now. And here's what I mean. Let's go to Ethereum. Let's do this chart. Let's look at Bitcoin. So Bitcoin's declining. Well, now it's going back up. So this is confusing. I think ultimately it goes back up. But what we are seeing 30-minute, does this make sense? Nah, you can't see it on the 30 minutes. Go back. Let's go to the 4-hour. How does that look? Nah, it doesn't look as good. Let's go to the daily chart. You're seeing weakness here for Bitcoin around the ETF. A lot of weakness. Now it's picking up. This is wild, man. This is going to be wild. But Ethereum has been just picking up. So you could get the rotation out of Bitcoin into Ethereum while people sell the news. So you might get a sell the news event, and we're seeing literally ETH making new 52-week highs, and ETH has a lot of room to run here. This would be great for altcoins. ETH doesn't have any resistance till 3,000, maybe even 3,500. So you could see ETH make a huge move higher while Bitcoin stalls with the ETF, right? A good, just a typical gotcha. A typical gotcha. Oh, we passed the ETF, and then Bitcoin stalls, and everybody's like, what the heck? Boom, rotates into Ethereum. Why? Because they know that money will inflow to Bitcoin, so that position will be fine. But they want to catch the move on Ethereum, because if Bitcoin goes higher, Ethereum's going higher, and then altcoins are going higher. I'm still looking at I'm still watching. This is my trade here. I'm still watching Chainlink. Now here's the interesting news. This isn't Chainlink news. I'll check on Tesla for sure. But BlackRock just said they're cutting their workforce. A lot of banks, Citigroup, cutting their workforce. Why? Because they're tokenizing their process. They're tokenizing their process. That tokenization happens with CCIP, right, globally. And this is what Chainlink does. So I think that's a good bit. Is it going to use the Chainlink name? Are they going to say Chainlink? No, they're not. But we do know that increases the computing power, or not computing power. That increases the usage of CCIP if they do that. And we are seeing it. SEC approves first spot Bitcoin ETF. Man, this is wild. We'll just watch Bitcoin right now. I think look at Ethereum is running up on the ETF. That's surprising. Just curious, how'd you get a red daily candle on SPY for yesterday, January 9th? How you get a red daily candle on SPY? What do you mean? Are you saying my charts are different than yours? Or let me see. Is that what you're saying? Are you saying that my charts are off, or why did we turn red yesterday? And just FYI, I usually answer the YouTube stream primarily first. So yeah, what do you mean? Be a little more clear about that, Fibonacci Poppy, if you don't mind. Lion's Dream Shop says, what is this SPY rally for today? Man, you guys got to pay attention to the rally. I think the SPY rally is, there was some big orders here at 4. So like, let's go to SPX. There was a bunch of, I think it's just technical. There's a bunch of volume for SPX, a bunch of resistance here. Did I mark it at this level, which was like 47.50, I believe. I marked it earlier, and we got through that level. People are covering, because why are they covering? Well, shoot, if you break out because CPI tomorrow, then if you break out because of CPI tomorrow, then you're going much higher. But honestly, I can't really tell you, bro. There's just too much going on right now. We don't know. We don't know what this rally is for. Why people are covering, and then all of a sudden they're shorting. Zero dated options is creating more volatility. So it's anybody's guess at this point. There's not always an answer. It could just be positioning. It could be positioning at this point. Let's go back to S&P real quick. Since you answered that question, you can see it better on the pre-market. On a technical basis, where's SPY? On a technical basis, all right, let's go to the 30-minute. You just got above the previous couple days. So here you go. Here's your answer, bro. Technically, here's your resistance. Boom. Boom. What is this? 47, 475-ish, 47.50. You broke the resistance. You broke it, and then you held it, and you held VWAP. Big upside move. Everybody covers. Now you're coming back down. So it's just volatility, really. No big news. The big news is tomorrow. What does inflation look like? To answer you there. Please check Tesla. Yes, I'm watching Tesla. That's what I'm looking at. Oh, your charts are different. What? No way, bro. Are you kidding me? TikTok. What did I say this time? It says gambling. Maybe because I talked about Bitcoin. Just got removed on TikTok. Maybe for maybe because it said gambling. Oh goodness. You can't talk about nothing. Wow. Pisses me off. All right, so we'll just switch over here. I'm glad that Instagram isn't that sensitive. That's the reason why ETH pumps. Yep. Okay, let me try to get your. I see you put a. So you put a link here. Let's see what your link says. Man, TikTok is so sensitive. What did I say? Can't say nothing. Oh, okay, I see. Let's see what your tweet is. Valkyrie Chief Investment Officer Steve says it wouldn't be surprise him if we saw Ripple, XRP, and Ethereum spot ETFs coming to the market now that the SEC is about to approve for Bitcoin. Okay. I'm gonna push back on XRP. XRP. So typically the ETFs that are actually being passed are big sell off on the S&P. Typically the ETFs. Okay, I just appealed it right now. The ETFs are going to go for the cryptos or the blockchains that are not deemed a security. Ethereum and Bitcoin are the only ones, and Chainlink. So I think it's more likely you get a Chainlink ETF than an XRP. XRP is already. Well, actually, no, you're right. No, I'm wrong about that. XRP isn't a security yet, right? So maybe so. Maybe you do get a XRP ETF. I'm wrong about that. It's a Solana. It's Solana ETF that I believe we're not going to see. Probably not Solana. So yeah, maybe you get that. But Chainlink was the other crypto that was not deemed a security so far. There's no language on that, so that's interesting. Damn it, TikTok pisses me off. Hate getting banned. So your poppies, you said your charts are different. That's weird. I'm on the daily chart. Man, that's a big sell off right there. Big sell off. All right, let's go. Yeah, this is my daily. What does your chart look like? You didn't Are you sure you're not on the 4 hour? Dang, are they messing with us? Giving us different market data? I mean, why would there not be though? Why would there not be a red candle? Yesterday was. Oh, I see what you're saying. I see what you're saying. That does look kind of weird because yesterday should have been green. Yeah, yesterday should have been green. That is weird. Okay, I see what you're saying. Yeah, we didn't close 471. Did we close at 471 yesterday? Oh yeah, my charts are off. I don't know. Something's wrong with TradingView because something's wrong with TradingView, bro. Yeah, it closed at 473. So that daily chart shows that we closed here. That's weird. Yeah, that is off. That's not right. That should be green candle, green candle. I don't know. Yeah, we did finish green. I don't know. You just think you have to trust it, and then they give you the wrong candles. So now I get suspended, and then my candles are off. What's going on here? Who knows? Right at the highs. Well, at least it was a sell off right at the highs. No breakout pre um inflation report. A lot of weakness. Yeah, that's weird, bro. That is not good. Somebody needs to report that. I'm not going to report that right now. Back to the lows. Okay, we'll see if we hold VWAP into the close. Does the Bitcoin ETF change anything? I don't know. I don't think so. U.S. Securities Exchange Commission approves 11 spot Bitcoin ETFs. Wow, this is bullish. Bitcoin not moving, but Ethereum is moving. Ethereum is moving off the ETF. Well, it's official. It's official. We'll see how this plays out going into tomorrow. All right, we'll look at Tesla. I'll be right back. We'll look at Tesla. We're in what, an hour 15. So let me take a little break, get some water, and then we'll look at Tesla. Hedging until tomorrow. Yeah, I wouldn't swing anything right now. Who knows what happens tomorrow. I wouldn't swing. Okay. Okay, there we go. William Siding Fed Bar says BTFP expected to end March 11th. That's for banks. So the Bank Term Funding Program ends March. That means no more, rescue liquidity for the banking sector, mostly regional banks. Is that causing S&P to sell off? Let's see. Nope, not really. And that's why March is going to be very volatile. So the BTFB, basically the support for the banks is gone. And then you might be close to the RRP liquidity also being gone. That might force the Fed to cut rates. That might have to, especially if inflation is at 2.9. I think by then, what are we getting? December, let's say December comes out at 3.2, which they are anticipating. Okay, so January comes. Well, I'm sorry, February comes, which is January's data. Let's say we're at 3 again. March, we're at 2.9. Well, they're going to cut rates more than likely. But if inflation stays above 3, maybe they don't. But then you have an issue here. Do you cut the Fed balance sheet or do you cut rates? Right? I don't know. It's going to be interesting going forward. See what's Tesla looking at. Tesla just getting rejected. Still can't make a move higher. Grayscale team has received necessary regulative approvals to uplist GBTC to New York Stock. Dang, okay. That's pretty bullish. XLK 191 gap fill. What is XLK? Oh, you're playing this gap fill. I see. You must be long. Okay. Yeah, XLK has been pretty strong going forward. Anyways, looking at Tesla here, taking a step back. Man, the S&P looks pretty strong. If you get a good report, I wonder if they leaked any information too. If they're leaking the inflation report, then that might be the signal we're seeing here. Okay, is this a reverse head and shoulders for Tesla? Possibly. Might be seeing that revert. And then we've had a sharp decline. Let's see what that RSI looks like. It didn't reach, too close to the bottom, but this is on the 5-minute. So this is really short term. But you do have a possible head and shoulders playing out reverse. Once you get above 236, 235.50, 236, we could be filling this gap up here at 240. Got a small gap there at 240 for Tesla. That would also break us out of the downtrend at the same time. if we do reach that. I think it's going to be short lived though, because earnings are, you got to get through earnings. You got to get through earnings. We're still on this uptrend. But also you have Head and Shoulders forming on the uptrend. That doesn't, I know a lot of people, this is why Tesla's going to be volatile, I think, for earnings, because you have the opposite pattern playing out. You have the opposite pattern. Here's your shoulder, there's your head. And I know a lot of shorts want to eat this up, this break to the downside. If they report bad, yeah, we could break down here. That'll be really nasty for Tesla. Let's see. That'll take us, I mean, I doubt we go that low. It'd have to be a really bad report. But if it is, you better start shorting. You know, I'm waiting for that 224.47 gap on the cent. Yeah, I've been waiting. I'm waiting for that one. I'm trying to stay patient here. I'm trying to stay patient because you see the Qs and the S&P moving up so quick. Yeah, that gap is right here, right? 224. What is it? You said 224.47. It looks like 223 on mine. I mean, I could be off. 224. I mean, same thing. It's cents. It is cents. I wonder why is yours at 224.47? Mine's at 223.70, it looks like, or 69. 223.70, something like that. Man, a lot of people relieved that ETF is passed finally. We'll see if crypto goes up considerably. ETH high of day, Bitcoin flat. Yeah, it looks like a rotation in ETH. Yeah, it's just cents. Yeah, but yeah, I am looking for that to get down there to some degree. It looks like it can still move. It's getting trapped today. And we're still, look at I'm also waiting for this RSI Fibonacci. I'm waiting for this RSI to get a little lower. Typically, when you get down here, then you get the bounce. Better opportunity for me. I'm also looking into just shorting those 0DT options for SPY. I was thinking about that yesterday. Everybody's, you can play SPY day to day. So imagine you buy like 3 months out and you sell against those options on a daily basis. I'm thinking about that strategy. Always thinking of new strategies going forward. So yeah, that's how Tesla looks. I don't know. I still think it needs to come down here. That'll be a little early. I could be wrong. Definitely. We'll see. And it could just gap down tomorrow morning. You could get a bad a negative report. Something like this. That gap got filled at 205. So this never got filled. All right, so back to Bitcoin and ETH. Hey, good job, man. Glad you had a good day. ETH, let's see, 248. Yeah, it looks like 2,500 is a big level. It looks like ETH is going to eat up these gains. Probably rotation. So the playbook would be what? Bitcoin has ran up into the ETF, right? Ran up into the ETF, and I always thought this was a possibility. We're at the top of that trend also. So we should, I don't want to say we should roll over because it's a big deal, but we got to the top of the trend, and capitulation came back down. So now these Bitcoiners that ran this up, or it could be institutions trading hedge funds, they say, okay, now the gates are open to flood into Bitcoin. Let's go ahead and rotate out because we know there's buyers, and let's trade up the ETH trade because we know for sure Bitcoin's going up over the next 12 months. Because if it didn't get past, Bitcoin's getting crushed, right? If it didn't get past, Bitcoin's getting crushed. That is no longer the case. It'll just, it could pull back a little bit. So it looks like they're just piling into ETH now. This will be good for alts. This will be really good for alts. Let me see. What is alts looking like? See where Solana's at. Man, Solana with the nasty price action. You see this dragon wedge. I mean, it's going to be strong if it does break out. I'm not messing with Solana, but a lot of people call it the ETH killer. XRP still nothing. Yeah, I don't expect I actually, man, XRP, I'm sorry, XRPers. I don't think it ever gets back to all-time highs. It's going to be like Litecoin. Aave looks okay. Uniswap. Huh. Guess I missed out Sal the news. I mean, it's a big deal though. See, it's different than most events because you're onloading a tremendous amount of demand, right? A tremendous amount of demand. So even if it was a Saudi event, it probably only comes back to 40,000. There's just too many inflows. Now you get the boomers like, okay, well, we know the ETF's coming. I mean, the ETF is here. Here come alts. Yep, Ethereum just chugging higher. Ethereum chugging higher. We're pretty much done here. We'll do the CPI report tomorrow. Look at positioning. You could see crypto at the moon tomorrow or by Friday. All right, that's all we got. Quick run through. We'll do a quick little refresh. Some people are still in here. We'll do a quick little refresh on what you might want to see tomorrow. Bank earnings on Friday. So market's expecting 3.2 in general. I'd say if we're at 3.2, we're neutral. Core is looking good. If core comes in at 3.9, that's looking good. That's what the Fed's focused on anyway. And a lot of these analysts are expecting 0.2. Who's the lowest? TD Securities 0.19 month over month. These are big differences. JP Morgan's very bullish. I don't want to say bullish, but dovish on inflation tomorrow. They didn't even do a CPI year over year. They just did a 0.2. They probably didn't want to say what they really thought, which was what, 3? Puts you at like 3 flat. Man, if you get a 3.7 in core tomorrow and a 3.1, oh man, the market's going to rip. The market is going to rip. I doubt we see anything higher, though. I doubt it. Probably from those average hourly earnings that were up a little bit last month. But either way, the market probably looks through all this and says, look, next print's going to be lower. We already know core PCEs at 1.8. So pretty bullish, I think. Ethereum headed to about 2,700. All right, well, I'm out of here. Appreciate you guys joining. We'll do a stream tomorrow. We'll dissect the inflation report. There's all kinds of different measurements. We'll dissect it. We'll look at Friday's data. We'll do some technicals. Thank you guys for joining. Eat more protein, lift weights, learn something new today, improve however you can, and stay blessed. And we'll catch you tomorrow.